Welcome back to the Daily Crypto Roundup, and today we've got a big one lined up for you. We're looking at crypto prices holding completely flat after yesterday's surge, a major regulatory development allowing US banks to step directly into the crypto world. A brand new Bitcoin treasury firm backed by Tether making its debut on the New York Stock Exchange. Short squeezes clearing out bearish positions, altcoins showing strength across the board, and the entire market freezing in anticipation of Federal Reserve decision. There's a lot going on beneath the surface even though the charts haven't moved, so let's break it all down. Before we dive in, a quick reminder about the XRP giveaway. 10 XRP goes to the best comment of the week, and 5 XRP goes to a random listener. And we're only 56 ratings away from dropping an extra 50 XRP before Christmas Eve. So if you haven't already done it, tap that 5-star rating. It takes 2 seconds, and it really helps push the show forward. Now let's set the scene with the latest market prices, because the market today is frozen in place. Bitcoin is sitting at $91,960. Ethereum is at $3,322.82. Solana is at $136.89. XRP is at $2.07. BNB is at $890.50. Dogecoin is at 14 cents. Cardano is at 46 cents. And across the board, the entire market is flat. No movement, no excitement on the charts. Just a market holding its breath after yesterday's big move and waiting for what comes next. And what comes next is where today's real story begins. The first major headline we need to cover is coming straight from US regulators. The Office of the Comptroller of the Currency has officially cleared American banks to act as crypto intermediaries. In simple terms, this means banks, proper, regulated US banks, are now legally allowed to process crypto transactions for customers. This is one of the biggest steps toward mainstream adoption we've seen all year. It doesn't just give crypto more legitimacy, it embeds it into the core of the financial system. It means easier access, bigger institutional involvement, and a regulatory framework that brings crypto closer to traditional finance. And it landed today, right when the market is desperately looking for confidence. The second major story is the debut of 21 Capital, a new Bitcoin treasury firm backed by Tether that has just launched on the New York Stock Exchange. This company enters the public markets holding more than 43,500 Bitcoin. That instantly makes it one of the world's largest publicly listed Bitcoin holders. And what this really signals is the rise of a new class of corporate entities whose entire strategy revolves around holding and deploying digital assets. We've had MicroStrategy leading the charge for years, but now we're seeing the model repeat. Institutions aren't just investing in Bitcoin anymore, they're building businesses around it. The third story of the day is the market action itself, because even though prices are flat, the context behind that flatness matters. Yesterday's rally was driven by traders positioning ahead of the Federal Reserve announcement. Bitcoin and Ethereum both pushed higher on expectations that the Fed may soften policy, or at least set the tone for easier liquidity moving into 2026. Today, however, the market has gone into that classic pre-Fed stillness. Everyone is waiting, everyone is paused. And when crypto pauses after a pump rather than retracing, that's usually a sign of strength. Another piece of today's puzzle is the report showing that 9 of the top 10 cryptocurrencies remain green on the 24-hour chart. This is crucial. When a market rally is driven only by Bitcoin, it's fragile. When Ethereum, Solana, XRP, BNB, Cardano and others all hold gains simultaneously, it shows broad-based confidence. It means traders aren't just speculating, they're positioning for continuation. Okay, we are going to pause here for a quick word from our sponsors. Stay with us. Part of yesterday's surge was also driven by a massive short squeeze. Millions in short positions were liquidated as prices pushed up sharply, and that forced buying added fuel to the rally. What's interesting today is that with the market sideways, short sellers have not re-entered aggressively. That shows hesitation on the bearish side and supports the idea that traders do not want to get caught offside ahead of the Fed decision. Another part of today's story that's worth spending a minute on is the sentiment shift taking place underneath the price action. Even though the charts are flat, social sentiment and derivatives positioning are both leaning more bullish than they were at the start of the week. You can feel it in the way traders are talking, the way analysts are framing the announcement, and even the way institutional reports are starting to soften their forecasts after a tough November. This is the kind of mood change that rarely gets picked up in the headlines, but almost always shows up in market structure before it becomes obvious to the general public. When people begin preparing for the possibility of easier liquidity, even if the Fed doesn't actually cut immediately, that alone is enough to shift behavior. You see fewer aggressive short positions, fewer panic sellers, and more strategic accumulation at stable price levels. Today reflects exactly that. A sideways chart in the middle of a sentiment shift is often more informative than a green or red candle. It tells you where conviction sits. And right now, conviction is quietly building, even if traders aren't shouting about it yet. The market feels like it has moved from fear to curiosity, and that curiosity is what fuels the next phase of a cycle. It doesn't guarantee upside, but it sets the conditions for upside to be possible. We also saw reports today from CoinDesk highlighting how digital asset treasury companies, particularly those with exposure to Ethereum, are outperforming peers. These types of firms tend to accumulate during periods where macro conditions appear to be turning. It's quiet, it's steady, and it's one of the most reliable early indicators of institutional sentiment. When treasuries start leaning in, it usually means liquidity conditions are improving. And finally, broader markets give us one more clue. Reuters noted that global stock markets are cautious today, showing flat or even slightly negative performance, while crypto has remained firm. That doesn't happen often. Crypto and stocks usually move together. When crypto holds its ground while equities hesitate, it suggests risk capital is flowing toward digital assets rather than away from them. Even with the market holding completely flat this morning, the real focus is on what happens after today's Federal Reserve announcement. Analysts across the major desks are calling this one of the most important macro moments of the quarter, and the majority agree that we're more likely to see a burst of volatility than a sustained drop. Crypto is positioned very differently from equities going into this meeting. Bitcoin is stable, altcoins are holding their gains, and there's been no fresh wave of short positioning. That usually signals traders preparing for a neutral or slightly dovish tone. Several analysts, including JP Morgan's digital asset team, said earlier today that even the smallest hint of early 2026 easing could trigger a second leg higher, especially in Solana, XRP, and the other high beta names. The more cautious voices, like Matrixport, warned that the first 5 minutes after the announcement could produce a quick shakeout, but described any early downside as volatility rather than reversal. The consensus is simple. A meaningful drop only comes if Powell tightens his language unexpectedly. Otherwise, the market is set up for either stability or continuation once the dust settles. And that lines up perfectly with what we're seeing right now. A market in compression, holding levels, waiting for the sentence that decides the rest of the week. It's also worth highlighting the timing here, because the alignment of events over the next 48 hours is incredibly rare. We've got the Federal Reserve decision, which alone is enough to move global markets. But on top of that, we have regulatory momentum, institutional positioning, and a major crypto-specific catalyst all happening simultaneously. Banks being cleared to operate as crypto intermediaries isn't just another headline. It changes the way capital can move into this space. Treasury firms accumulating again isn't random. It's what they do when they expect a shift in liquidity conditions. And retail traders sitting still today isn't hesitation. It's waiting for confirmation. When you combine macro catalysts with industry catalysts and behavioral catalysts, you get these moments where markets compress. Price stops moving, but the pressure beneath it rises. That's where we are right now. This is compression. Sideways action with rising tension. And historically, compression ahead of a major macro decision almost always produces a breakout move afterward, whether that's to the upside or the downside. The key is that crypto is better positioned than equities going into this announcement, and that's not something we've been able to say consistently across the year. This time, crypto feels early. It feels prepared. And it feels like the asset class sitting closest to the ignition source if liquidity does begin easing into 2026. So even though today's price action is boring, Bitcoin at $91,960, Ethereum at $3,322, Solana at 136, XRP at $2.07. The stories beneath those prices are not boring at all. They tell you exactly what the market is preparing for. This is the calm before the decision. This is a market that has already priced in optimism and is now waiting for confirmation. Banks being allowed to act as crypto intermediaries is huge. A new publicly listed Bitcoin treasury firm is huge. Broad altcoin strength is meaningful. Institutional accumulation is meaningful. Short sellers stepping back is meaningful. Every signal we're seeing today suggests that traders are leaning bullish into the Fed meeting but are cautious enough to avoid overextending in front of the announcement. And that's where we'll leave it for today. The next 24 hours are going to be incredibly important, and tomorrow's daily crypto roundup will likely be one of the biggest episodes we do this month. Remember to drop your rating, enter the XRP giveaway, and let us know your thoughts. And as always, we'll see you at the top.